My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. If you've ever driven by a hotel or a motel and you've seen a ton of cars in front, you've kind of crunched some numbers because you know what it costs to stay in a hotel or a motel these days, you've probably thought this could be a really good business, and it can. And today's guest, zooming in from Salt Lake City, Utah, Jay Kansagra, knows all about this. Not only is he a very active hotel investor, entrepreneur himself, but he grew up in a hotel family. He actually grew up, if I'm not mistaken, in a hotel. So, Jay, welcome to the show. Great to have you.
Oh, thank you so much, Dave. It was great.
So, Jay, I read your information that you sent ahead of time that you grew up in a hotel. Give us a little snapshot of what you mean. Like, literally, you grew up in a hotel, like that 80s or 90s sitcom or whatever it was
Basically, that was Zach and Cody, which was more recent than that. But yeah, no, it was not as glamorous as any of those. It was we grew up in a hotel. It was a Super 8 in southern Utah, and basically you walk in, there's the front desk, and then there's a laundry room in the back, and then behind that is the manager's apartment, and that's kind of where we used to live. And so did a lot of front desk, a lot of housekeeping, breakfast, and tons of things. Laundry was my favorite thing to do. So till this day, I do enjoy doing laundry. It's Monday, and it gives me a lot of time to reflect and think. So that's it.
Okay. All right. Yeah, definitely not glamorous. And you got to hear those middle of the night ding dings when people coming in too late. All right. So you got out of that, and you got into IT for a while professionally. Yeah. And then you came back to the hotel business, the family business. Tell me a little bit about that. What made you decide to jump back into it?
Yeah. And I spent a lot of time getting away from hotels, thinking I never want to do this again because of, my experience there. And it was always 7 or 8 years that I did this with my family. And then I got into tech, did a lot of work in tech, went to Carnegie Mellon for grad school, which was a big break for me to then work in Chicago and New York, and decided to move back to Salt Lake. But most of my work was at trading firms and investment firms, where I did a lot of data engineering work. I built teams and things around it. And so I got a lot of exposure to how the entire companies operate, right? We're not just talking tech and product, we're talking how they get investors, how they invest, what types of returns do they do, what's the legality behind it, legal departments, even HR and growing teams and marketing and sales. And, I, as a data engineer, the data teams, you support every department. And so a lot of exposure around there. While doing all this, I'd always at night or, later, I'd help my dad with his hotel work and either doing accounting or legal work for him. And that kept me connected with the industry. And I invested with him in a Motel 6 here in Utah. Yeah. And that Motel 6 had made me almost as much, if not more money than, kind of what I did in my tech career. And
your full-time job.
Right, yeah. As I told myself, this is great, but what if we just, I go back and instead of running away from it, I really get back to my roots and something I do enjoy. Hospitality is a lot of fun for me. I love talking to people and understanding where they're coming from. So how do we bring that investment experience back with hotels? And so that's exactly what we did. About 2-3 years ago, I got in touch with my cousin who was also in the industry, and we started our company together. And we've since done about 5 or 6 acquisitions now, 1 construction, and so we're growing rapidly, and we're pretty excited.
That's a cool, very, very cool backstory, Jay. So if I understand correctly, you grew up in this hotel. It was definitely the quintessential example of a mom and pop hotel. You had a business and you lived there. Did your dad buy a few more while you were working, or was it kind of just keep that one going, and then you kind of had the idea for expansion? And
that's a really good question. No, so we had that one going, and you're making, as a family, we're doing 40,000 a year, and it's me, my sister, mom, dad. We had a cousin living with us too, so supporting all of us with that was definitely difficult. And I remember those hard times, but great times. I have lots of memories from it. And so growing out of it and then buying his first hotel was in a remote town here in Utah. But before he did that deal, he had done one or two other deals where it just didn't work out. And so cutting your losses and knowing that it's not good and stepping away from it and having the gut to redo it is incredible. And I do look up to him for that vision and that willingness to having that resilience of getting into business again, right?
Yeah.
And I do learn a lot of that from him. But yeah, it took one or two deals before he got one that was really good. And mom and dad moved to that one in that location. They ran it while, I was off in school and work and whatnot. And then they bought this Motel 6, like I said, in another town in northern Utah. And that's when they were closer to Salt Lake. And I decided, if I want to raise a family and I want to do this, I'm just going to go closer to where they are and then move back home to Utah. And so that's how I came back here. And since then, we've just, we've been acquiring and building our hotels since then.
Cool. So how many assets do you have under management at this particular time? We're recording this in March of 2026. What does the portfolio look like?
Yeah, it's about 11 right now. And then the majority that we did were in the last 2 to 3 years that we did with the new company. Yeah. Yep.
So 11, and I looked at your website. I took a little look at the portfolio. So you've got some motels and you've got some hotels as well, correct?
That's correct. Yes. Motels being the smaller units, that's kind of where we started. But now we're moving up into, mid-scale hotels, and we're looking at Expresses, Hamptons, Fairfields, things like that. And we're also moving up brand, right? So, we love, Wyndham Choice Properties have been great for us, and Choice is a great brand, but, we are going up a level into the Hyatt, Hilton's, Marriott's, and IHG and so on. So,
okay, very good. So your dad was a very resilient person. You kind of grew up living in one of these small hotels, a motel. It was tough going. He wasn't making any money. He hit his head against the wall a few times trying other ones, but stuck with it and finally kind of got a good one.
Yes.
So, yeah, that's amazing. Yeah, that's a lot to look up to. A lot of people would have given up.
Yeah.
That's for sure. So then, so what was kind of like the secret sauce that you guys figured out that makes all the difference between a crappy hotel deal and a good one? I mean, there's tons involved, I know, but big broad strokes, what were the big takeaways that you and your father came away with from that experience?
Yeah, I think everyone that enters the hotel business, they have some sort of a connection in it, and we didn't have much, right? That was not our background and experience. And when we grew up in one, managing one, and we learned a lot. But a lot of guys that buy hotels, they come from either brokerage, they were brokers and they were selling, and they ended up investing in a couple of deals and they're having their own. Or construction, you see a lot of people, they were home builders turn into hotel builders, and that's just what they do. And then there's this third tier, which is really us, is operators. It's people that have operated hotels, have decided to buy their own and kind of grow into it.
Mm-hmm.
And so, you have to pick, first of all, what is your strength? And if you're a builder and that's your strength, I think building new properties is where you want to be. Renovating properties or buying rundown properties that you could just improve and then add a flag to it, that would be your bread and butter, all day. For us, that's not our experience. And we have people that we hired and they have that experience and we're able to go do that. But if we were to enter a rundown hotel deal and try to ramp it up, it just would not have worked out, right? That would have been really difficult. And so I think you have to look at a lot of different things and what your strengths are, what your background is, and kind of what you bring to it. With us being good operators and focusing on operations, we're able to get better brands, right? So if I go talk to, like ING, for example, they'd be more than happy to talk to us and roll the dice on us on a, older building or something, just to know that, hey, these guys will take care of it. They will improve it. Whereas somebody else that's new, that's coming into it, who doesn't have the hotel experience, they wouldn't get that from the franchise. And they would have to stick to a lower ADR franchise or daily rate franchise, basically, and the revenue would suffer from that, brand would suffer from that. So there's lots of perspectives in it, but it really comes down to what is your strength and kind of what you bring to the table. And there's tons of ways to underwrite hotels. Mm-hmm. We've done all types of deals, but it changes every couple of years. Right now in Utah, it's such a competitive market. There's a lot of hotel owners, and inventory is so small. And it's good to do business in Utah. And so it's becoming difficult to find good products. And the prices are strong, really high right now. So for example, back in the day when you buy a hotel, you looked at the revenue and you just did 3 times revenue. And like, that's kind of how you priced it. Or you did, 3.5, 4 was high. In Salt Lake right now, people are trading almost at 5.5 or 6 times revenue, which is really high. And it gets to a point where you can't make your payments, to your bank for your mortgage. So you have to have a higher down payment and whatnot. So it gets tricky. But multipliers, another one that people look at is NOI, right? Is like, what is your net operating income? And then they take a cap rate based off of that. I think that's the best way to look at it, because it has to be a deal that everybody can win in, right? And the third way that people have started trading is replacement cost. Because there's not enough place to build in Utah. It's surrounded. Salt Lake is like, it's got mountains on both sides. So the city can't grow. It has to go down or up. And it's created a lot of demand in terms of land and prices. So what happens is people say, if you go build this hotel today, it'll cost you $200,000 per key, versus why don't you just pay me $200,000 right now per key, and you'll have an up and running building ready to go. And so there's some truth to that, but there's also it's also not the
a little bit of deferred maintenance and a few other things that have to be done.
Yeah, I mean, there's a lot of, exactly. Maintenance is the biggest thing in a new building. You're not going to have that issue, but they are right that you'll start earning day one versus you have to wait 3 years before you open. So lots of things to look at, but really that's the main thing is, how do you enter and then how do you value a property? Those are the two things I would say.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. I would imagine, Jay, that this must just be such an amazing experience for your father.
Yeah.
All those years working so damn hard and not seeing a ton of fruits for the efforts. And then boom, relatively speaking, pretty quickly, now you guys have got a portfolio of 11 properties and start to get into much bigger, nicer type of hotels. How do you guys kind of divvy up responsibilities? Who does what on your team?
That's a great question. And I will say, we were at a whole convention yesterday here in Utah. It's American Nation Hotel Owners Association, and it's a big advocacy group for, basically supporting all hotel owners in this space. And we were talking to all the elderly folks who aren't in the industry, who have been in the industry, and they're very wealthy and they have tons of hotels. The one topic that came up was, man, it would really suck if our kids didn't want to enter this industry. And imagine, what do we do? Like, we built all this, we have all these things. It's kind of wasteful, right? Because now people are, no issues with what people want to do. My sister's like that, where it's like they want to work their job and be done and not think about it. That's phenomenal, right? That's how they want to live their life, low stress, so enjoy it. But when that happens and you've done this, you built all this, and there's nobody to take over, it's really difficult for that person. And so luckily we're not in that situation, but that was the conversation. It's funny that you bring that up, being a second generation into it. We do divvy it up in a way that, a lot of the economy segment and the independent hotels, that's what my dad really likes running and enjoys overseeing those. And he has, his crew, his maintenance guys and whatnot that go across and handle all of it. So that's really what he does. And that's where he focuses, where, my cousin and I, we go into the upper mid-scale properties, new construction, just deals that require more, more staff, more professionalism and everything. That's kind of how we divvy it up right now.
Nice. That is wonderful. So Jay, I would imagine this is a very capital intensive business. And you mentioned before that you got a lot of experience working with other companies and kind of seeing how they structured deals, how they raised capital, how they work with investors, all that kind of good stuff. How have you transferred that over into this your business, and what role does private capital play for you guys?
Yeah, that's a great question. And so before the, I believe that there's a way to raise and invest capital. I think that is one of the best ways to go from, grow as a person that's entering the industry. And I consider myself to be entering the industry, even though we've had some hotels here and there. We really didn't enter the industry till about 2 years ago. And what I mean by that is, there's a lot of players that have had a lot of assets and real estate. And you're right, it does require a lot of capital to be in that position. And that grew over time, 30 years, 40 years, right? But we live in a world where, maybe 30 years ago, if you wanted to reach 1 million people, it would take a lot for you to reach 1 million people. I mean, you would newspapers and, going door to door, go to the town next door, whatever it is, it would take a lot for you to reach 1 million people. Today, you could do that within an hour if you wanted to reach 1 million people, right? The technology substantially changed. So the power of influence, the power of, pulling capital together, the power of going and doing bigger deals, as long as you know how to do it and you're disciplined enough. Discipline is the most important thing. I'll just highlight that there. Discipline is super important, but because you're managing other people's capital and everything, you have to be very disciplined. But it's what I'm saying is now raising capital and entering the market is much easier than what it used to be. And so it's that's how I think the industry has significantly changed in that sense that you could go in and do more with having discipline, knowing the technologies and tools, and knowing what these bigger firms use and how they raise capital, how they manage their investors. We've kind of replicated all of that, and that's really what we do, and we don't publicly market our deals, right? All of our investors are still friends and family, but at some point we will want to do a bigger deal, and it'll be a $50 million deal, $60 million deal. And I think we will need help getting capital from outside. And at that point, we will want to go out and do a broader audience outreach. And so we're prepping for it. We'd love to do that. We'd love to manage bigger properties. We think we have the team and the capacity, and we think we can do it really well. But we're just not there yet. So we haven't done that. We haven't done public outreach for any of our deals today.
Yeah, very interesting. So when you are raising capital, even from friends and family, sometimes they're the toughest ones.
Yeah,
right. You got a lot of other baggage going on there.
Yeah.
But, for the folks that didn't maybe experience growing up in the hotel or didn't know you that well back then, what do you find hooks investors on the idea of hotels versus stocks, bonds, mutual funds, or even other kinds of real estate, multifamily, et cetera, et cetera? So what kind of really hooks people in for you?
Yeah, it's stability. It's I say people, it's boring. It's a boring business. It's linear, right? You grow very consistently, but you grow. That's the key. And I think you go into a lot of other deals, and I've done. I've worked for so many startups, and I've also done a lot of advisory work, and invested in them. And startups are phenomenal. I love the idea. I love the spirit, but the issue is you're not always successful. And I think in hotels, if you put the same amount of energy in a business like hotels, it doesn't have to be a hotel. It could be any other real estate business. It's consistent. It's linear. You're going to appreciate over time, and you will grow as long as you can maintain the property value, which I don't think is that difficult to do. What's really unique about hotels, though, is you have your service businesses. We also have a mental health clinic with my wife and others, and these are what I call service businesses, dental offices, even gas stations or other things where it's just churning money. It's making a lot of money, but as soon as that main person stops working or you're not actively managing it, you're done, right? There's nothing to sell. You don't have any appreciation to sell. And then you got your really heavy capital intensive, you got your strip malls or even office buildings, you leased it out and you've forgotten about it. You don't even know. You have one person maybe working that fixes things every quarter.
Right.
But it's growing on its own, but it's not bringing you that much capital. Whereas in the middle, it's hybrid, are hotels where you have your real estate play, as well as you have to have operational skills and stability to be there in the middle. And so you could get that appreciation by hard work, and you could up the revenue, and it could increase the value of the hotel. But let's say it's a tough year, tough market, whatever, you're still going to have the real estate safety net that you have a building, it is big, it does continue to appreciate over time. So it's really hard to lose money in a hotel business. as long as you have discipline and you're, managing both of those sides. So that's usually what I go with. I tell people that this is why I love hotels so much. And then obviously, depreciation benefits and all that is huge, but this is the main thing. It's a hybrid business.
Okay. Yeah. That's a very interesting take on things. I like that analogy, compared to a startup, you're hoping for a home run, a grand slam kind of thing. This is more base hits. Not that I'm a baseball fan, but you know what I mean? That's what it's kind of like, but it's consistent. Like you're always hitting a base hit, right? So it's much more predictable.
Exactly. And, with your kids now and with kids, it's, I realize that, just hoping and burning out is just not feasible while you're also raising a family. So you want to be consistent. Sanity is the thing, right? Like you want to be sane, and there's just a lot going on. And so this really helps us be in a better position as a family, as well as it's great. It's lucrative. It grows. It's not being a billionaire overnight, but it's consistent.
Nice. Jade, if people would like to find out more about you and your company and maybe reach out to you, do you have a website people can go to? Where's the best place for people to reach out?
Yeah, it's just my last name. So Kansagra.com, Kansagra.com. And they could reach out to us there from contacts, but my contact information is out there as well.
Fantastic. Jay, this has been great. Thanks for being on the show.
Thank you so much, Dave. Really appreciate it.
All right, everybody. See you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.